Hey, this is Nate Carver, your favorite mortgage guy and host of Between Two Doors. Today, we're talking with Chelsea Price. If you've ever had questions about credit repair, what that means to buying a home, and your bottom line, we're going to talk to Chelsea. She is with Mortgage Ready LLC. Hey, I'm Nate Carver, and welcome to Between Two Doors. Hey, Chelsea, how are you doing?
Hi, I'm good. Thanks so much for having me.
You- Welcome. This is going to be a fun conversation, I think. Everybody from time to time, their credit goes up and down, and they're wondering where their
Mhm.
FICO score went and what ultimately does that mean. And you and I are going to talk about that in regards to housing and seeing what we can do to help people hang on to their hard-earned income. Tell me a little bit about Mortgage Ready LLC and how you came about being a part of Mortgage Ready.
I've been over here for just a little over a decade. Mortgage Ready has been around for going on, getting up on 15 years now. Basically, how we established is the owners of the company had a moment where they were realizing that there were a lot of credit repair resources out there, but unfortunately, it didn't seem like a lot of them were working in the way that was actually the most beneficial. They kept finding that a lot of companies were honestly kind of purposely dragging out the process to continue collecting from clients month after month after month rather than actually getting folks, quote unquote, mortgage ready. So it kind of came from a need that was seen that wasn't really seeming to be fulfilled. And really, what we wanted to do is partner with mortgage professionals all over the country. That way, we could kind of prove our accountability because, whereas a lot of times people hear about credit repair from advertisements and marketing, uh, we're referred directly from mortgage professionals trying to close loans, which means not only do we have to do a good job, but we have to do a good job quickly. Otherwise, those
Hmm.
mortgage professionals are not going to continue referring their clients and Mortgage Ready won't be around anymore.
Right. So 10 years in the industry and helping people get ready to buy a home. Tell me, is there an incident, a couple family you helped that stands out to you? Maybe the very first one you ever did.
Yeah.
What did that mean to you? Kind of briefly tell me what you can about that and what that meant.
Yeah. Well, it's hard to pinpoint one to be honest with you because we've met a lot of folks. I will tell you, majority of the time when I am first meeting an individual, they don't currently own a home. They're usually renting. And, in all the years I've been doing this, I'd say most of the time when folks have struggles with credit, it's not a result of negligence or not caring. It's usually
Hmm.
because something has happened and life doesn't happen in a bubble. And it trickles down to everything, including credit. And the way credit is designed is it's made to be honestly quite unfair. And so folks end up getting in these holes and they don't know how to get out of it by themselves. And again, the way credit's designed, it's almost made nearly impossible to do it on your own. So a lot of times when I'm meeting someone, they have gone through something. And they just need a little bit of help. There have been a number of instances where we've helped folks that have gone through like traumatic medical situations, and they just have that dream of home ownership. There is one family that I can kind of think of because it's kind of a sad story, but basically it was a older husband and wife. The
Hmm.
wife had cancer, and she desperately wanted to get into a home loan before she passed. That was their dream. Okay. We did work on the credit. We did get them to that mortgage ready level, and they moved forward on their home loan. And a couple years later, the husband called us, thanked us, and said, she was only in the house for a little over a year before she passed. but we were able to get that because of y'all. And that's just, those are not unfortunately uncommon stories in a way, but it is something where, I will say, I do think that we help people to be able to achieve dreams that they may not be able to achieve by themselves. So
Right.
it's important. It's
So,
very.
so what did that mean to you?
Yeah. Well, I mean, I'll tell you when I very first started doing this, I didn't really know anything about credit. I will tell you, there's no class you can take, there's no school, there's no college. Um, Again, credit is kind of designed to be difficult to understand on purpose. The credit bureaus are private for profit companies. They make money from posting things, right? And so one thing that I learned early on is if you have a poor credit score, I mean, it's nearly as bad as walking around with like a conviction sometimes,
Hmm.
right? The damage and the amount that it can hold you back. So to me, it's really opening those doors to people, um,
Yeah.
and taking a truly kind of flawed system, teaching people how to play the game against it. Because, one thing I will tell folks is, we don't really work with the bureaus. If anything, we're kind of working against them and teaching folks the rules of that game so that they can come out on top and, hopefully never have to worry about their credit again.
Right. Good. Okay, awesome. So let's talk a little bit about some credit repair basics
Sure.
for buyers, for home buyers and homeowners. What are some of the most common credit issues that you're seeing people come to you with in the current market?
Yeah, well, I think for the most part, it's usually more so just like misnomers and just not
Hmm.
understanding things. Because again, it's not taught and it's kind of made to be confusing. We definitely have an issue with folks coming in and then just general not understanding. A lot of times I'll hear folks say, "Well, I've disputed all these accounts and they're still there." And then we kind of have to have that conversation as far as, disputes don't help. You can dispute anything yourself. You can hire a company that disputes something, but the only thing that a dispute does is it adds a remark to the credit underneath that account stating you disagree with that item. It doesn't force any legal action to take place. And if you end up with too many disputes on your credit, it can actually make your report seem unreliable. It can prevent underwriting from being able to go through. So a lot of
Yeah.
times, a big part of what we do is just that teaching and kind of trying to dispel some of that misinformation. Another thing that we oftentimes see is, I'll be talking to someone and they'll be like, "Well, I'm pretty sure my credit's about to be cleaned up here soon because I just paid off everything, right? All my negative items, I've taken care of them." Which,
Yeah.
logically, from a logical standpoint, that should help, right? That should work. You have a debt, you pay that debt, problem should be fixed. Unfortunately, the reality is when you pay off a bad item, it doesn't remove it right away. It continues reporting for 7 to 10 years from the date of payment.
Mm,
So, again, this is information that's not just out there. Another thing that I hear is there's a misnomer that negative items will go away naturally on their own after 7 years. That's not true. Okay, what that comes from is the fact that when you pay it, then the clock starts ticking 7 to 10 years from that date. But a unpaid negative item, there's no statute of limitation. That debt could stay on forever. So for the
right.
most part, what I find more so than anything is just a general lack of understanding. And, you know, I would not ever fault the individual with this because underlying that is just a general direction of not teaching and kind of misinformation on purpose in a way. So
Right.
a lot of it's that, if that answers that.
Yeah, you covered a couple of questions I was going to ask you on the difference between a credit repair
Yeah.
company such as yourself and then doing it on your own. And I think that was a key point there on the disputes and how those disputes do pile up
Mhm.
if you're trying to do it yourself. What on a typically what are you seeing? let's say they follow through and do what you're asking them to do
Yeah.
in getting their credit scores up, how quickly are we seeing credit improvement? And are there some averages in you know, yeah, let's start with that one, then I'll ask you the averages.
Sure, sure. So, any work that is required of the credit bureaus, legally they have 45 days to do any work required of them.
Okay.
So, for the most part, you don't really see changes on your credit from 30 to 45 days. Uh, they do typically take that full amount of time, though, which is why we say that.
Yeah.
The minimum time frame that we ever set over here if somebody chooses to move forward with us is 3 months. And that's because of those 45 days. 3 months,
Yeah.
45 days, that's the sweet spot, right? But we also check the progress monthly. So if it does happen
Hmm.
sooner, fantastic. Again, it goes down to the fact that our goal is to get folks back to the lenders as soon as possible. If that happens before the time frame that we anticipated, I mean, that's a slam dunk for us. That lender is going to continue referring their clients for sure. So
Sure.
we're definitely not trying to drag it out. The longest time frame we typically set is 6 to 7 months, and that's for individuals in like the low 500s or maybe even in the 400s. Now, that being said, there's no locked in time frame though. We work until credit's where it needs to be and the client tells us to stop because we're canceling time.
Hmm.
Or, I mean, if we remove all the bad items and there's nothing left to go after, well, then we reach out to congratulate that client and gently kick them off because we're done. We have nothing left to do. Uh,
Right.
the bureaus update every 30 to 45 days. So, if somebody were to be working on their credit themselves or monitoring it themselves, they're not going to see any change from like, let's say, paying down a credit card until probably the next billing cycle. Um,
Right.
and then we also will give people like tips and tricks about things with time too. Like for instance, credit cards, they only report back to the bureaus once a month on their
Yeah.
statement date. That's it. So you'll have folks that will use a card, immediately pay it off, thinking that's gonna be the best thing to do. But unfortunately, on the
Yeah.
statement date, nothing reflects, so it's not helping them.
That's right. I'm always having to coach up on that. And I'm like, look at your statement. You'll
Mm-hmm.
have two dates. One's the due date for the bill, and then there's the other date. That's the report date. And there's not one credit lender out there that will change that for you
Mm-hmm.
at all. So you're
Yeah.
on their timeline, and
Yep.
I'll pull credit, and I'll tell them a balance, and oh, I paid that down, and I don't doubt they did. I'm sure they
Mm-hmm.
did.
Yeah.
And I said, well, that's a prime example. You've paid them. They're on a different timeline to report that to the credit bureaus, and then the credit bureaus are on their timeline to make that change as well. So
Right.
yeah, so that's always a learning point. Um, Tell me in I guess some real world strategies. If someone listening today is looking to buy a home, are there some things that they can do now
Yeah.
that would help them when the lender, myself, goes and pulls their credit, whether it's a soft pull or a hard pull,
Yeah.
that would that they things that they could do now. Of course, they got to have that 45 plus days
Mhm.
um, that they could plan on. But if they did pull the trigger now, what kind of things could they do that would help boost their scores on the front end?
Yeah, well, I would say the very first thing would just to be having an understanding that what they're seeing online is not going to match what that lender pulls.
That's right.
That is one of the biggest questions I get on a daily because
Yeah.
as a an individual thinking about calling up, walking into a mortgage company, for the most part you're going to try and do your due diligence, check your credit first, right? I don't think I've met a single person who didn't at least check their credit before ringing up a lender. And then I end up having a conversation with them where they go, well, I don't understand, why were my scores so drastically different when Nate pulled, right? Well, that's one of the biggest things is knowing that when you are looking online, I would check your credit first, but be aware of where to look. Online pools are always going to be your highest range of scores. Mortgage pools are always going to be your lowest range of scores because it's the hardest to qualify for.
Mm-hmm.
The most accurate sites will tend to have credit scores about 20 points higher than a mortgage score, but there's outliers here and there. I would suggest that folks stay away from the really well-known free sites because they pretty much make up those numbers. So I'd never trust what you see on there. I would look through verifiable sites. The one that we recommend people use is actually Experian.com. You can get all three reports, and on average is about 20 points higher. So that would be number one. The second thing I would do is when you're looking at that report, take a look at your credit cards, see where the balance to limit is on there. If it's above 30%, it's damaging you. Anytime a credit card goes above 30%, it starts damaging the score. The closer you can get to $1 on that statement date, the more points you're going to get back. So if
Mm-hmm.
you pay those down so that they reflect on the statement date, like we were talking about, that's going to be one thing. And then the second thing I would say is see if there's anything bad on your credit. Late payments, collections, medical bills, anything damaging. And if there is anything damaging, you might want to have somebody look to get that removed. Now, it's very, very difficult to remove a bad item on your own. Like I
Mm-hmm.
said, you can dispute things, but you don't want to do that. You can call the creditor, but if it hasn't updated it, it could cause it to update. So that's not always the best course of action either. This is why we kind of exist the way that we do. It's real hard to get an item removed yourself. And one thing to realize too is that it's entirely voluntary to post to credit.
Mm-hmm.
For an item to be on your credit, that means that that company had to pay to put it on there. For them to take it off, they'd have to pay to have it removed. They don't want to do that. So
Right.
my recommendation is if there's anything bad on your credit, you may want to consider credit repair, honestly, because one bad account can hold back anywhere from 30 to 80 points. So
Mm-hmm.
that could easily be the difference from one bracket for interest rate to another.
Yeah. Do you track as someone's improved their scores, are you able to show them um,
Like how
either
many
short term or long term what that means to them in a dollar savings? That's more, I know I
Yeah.
can do that. Once I have
That's
the
for
numbers,
y'all.
I can
Yeah,
put
no,
that together. I don't want to put you on the spot.
no, you're okay. No, it depends on a bunch of different things, but you're right.
Sure.
That's definitely more of a loan question. Um, we don't look at that piece of it. We look at the credit side of things. But I will say, obviously your mortgage rates, your payments per month, interest rates, insurance
Yeah.
premiums,
Yeah.
deductibles, like literally everything looks at your credit. So
That's
if you
right.
get your scores higher beyond a home loan, you will save thousands of dollars. I mean, if your water heater goes out, if you have a better credit score, you might be able to replace your water heater with 0% down. So like
That's right.
we're talking
So,
about lots of avenues for savings.
yeah. So a key life hack for a homeowner, first time home buyers, if you go through a credit repair and you get your scores up, yeah, it's going to save you tens of thousands of dollars on the lifetime of your loan. It's going to save you thousands and thousands of dollars on your actual closing costs. And it's going to save you $100 a month in your monthly payment because you got a lower, you qualify for lower interest. But beyond housing, once you get your scores up, go back to your insurance company, your car insurance, your homeowner's insurance, and tell them, look, my scores are here. Let's rescore. Let's shop. I'm shopping my loan because you're going to get a better rate. Your premiums are going to come down. And so there's your homeowner's insurance, your car, your auto insurance, your health insurance. Those all will come down. And then you can go another step and go shop your credit cards and
Mhm.
say, look, my scores are up here. When you first gave me my credit, my score was down here. now I've got a higher score. I want a better interest rate.
Mhm.
You're saving money across your whole life
Right.
experience. Once we get those scores up, there's a free life hack, and that I've seen personally. I've experienced
Mhm.
that personally, and I've helped many home buyers get there, so where they're able to do that. And suddenly you're no longer having to spend three, four, $500 a month on interest to
Yeah.
somebody else. Spend that on your wife and kids, your husband.
Mhm.
So good for you.
Mhm.
That's my take on it.
Yeah.
Let's see what else. Let's see. We talked about some key tips. Let's see. Rapid rescore. That's something we do as a lender. If we get something, if we correct a mortgage, maybe there was a missed payment, or we can get a credit card pay down. We can
Mhm.
come in and rescore the loan. If you're if you got a maxed out credit card and you get it down below 30%, that's easily 50 to 80 to 100 points improvement can be.
Mhm.
Do y'all do the rescores too, or is that something?
Yeah, that's definitely a loan tool. Credit repair
Yeah.
does typically have that, but I will say, um, getting the negative items removed,
Mm-hmm.
kind of goes past that rescore. For instance, if you have a borrower that has a collection on there. Unfortunately, if they pay down or off that collection, a rescore is not going to help you, right? But if we can get that item removed, it will. In my experience with rescores, those typically are helpful when it comes to balances changing, usually on open accounts or like medical bills. If you need to show um, that the balance has updated on that since the last time you pulled it. But realize once again, if you have like a collection or a bad account in any way, really, and you pay it off, that's not going to help your score. One thing I think a lot of folks are surprised to learn is that the algorithm that's used to calculate credit scores is actually blind to account balances. Now it can see balance to limit ratio, which is
Mm-hmm.
what you're talking about, right? It can see if somebody has a
Right.
credit card that's at 75% usage, right? But it can't actually tell that they owe $1,000. So if you think about, loans, collections, medical bills, anything besides a open active credit card, nothing else has a limit. So the balance
Wow.
changes or they pay it off, it can't see that. The algorithm can't see that. So it's not going to help their score at all. However, once again, if we can remove that item, well, one bad account holds back 30 to 80 points. And something else to be aware of just for folks when they are taking a look at their credit is the less negative accounts they have, the more points they hold back. The
Mm-hmm.
more negative accounts they have, each one holds back a little bit less because they all add up. So, that's something to look at too. Now, regardless though, if you remove even just a handful of bad items, scores will go up because those
Yeah.
items are basically holding points hostage.
Right. What is there any statistics on errors on a credit report? Like sometimes there's just mistakes. People make mistakes, and it's not necessarily me, the creditor.
Yeah.
Or the creditee. It's something that the lender did, or the credit lender, not the loan officer,
Yeah, no,
not
I
me.
gotcha.
So,
Yeah. I don't have any statistics off the top of my head. I will tell you there's a little bit of a difference with the way that we're going after certain negative items because you're
yeah,
absolutely correct. Technically, you're not supposed to be able to remove an item from an account or from credit, I should say, unless there's an error. That's what we're doing, right? Is correcting errors.
yeah,
However, to a certain extent, we're not necessarily going after the validity of these accounts. What we're
right.
doing instead is forcing work to take place between the credit bureaus and these accounts posting these bad items.
Hmm.
Basically forcing them to do work they don't want to do, spend money they don't want to spend until we get enough deletion scores or where they need to be. And again, this is one of the differences between, what we do and what I see a lot of other places do. Instead of sending disputes, we're drafting up these investigations, sending them to the bureaus. The bureaus receive those. The way they're written, they force them by federal law to reach out to the companies posting those items.
Okay.
Those companies are then required to dig through their records to find specific information about the borrower, about the account information we are asking for through those investigations. So they have to find the correct information. They have to send it back to all three bureaus within 45 days. And they also have to pay each bureau to update that information in order to keep that item on the credit.
Yeah.
If they fail to complete a single one of those steps, well, then by law, that negative account or status has to be physically deleted. Now, to the point of errors, this is where we kind of act almost like the watchdogs. I mentioned earlier that the bureaus, they're paid private for profit companies. They get
Hmm.
paid to report things. They don't fact check. They don't double check these things. They just say, "Hey, we want you to post this. Here's the money," and they do that. Well,
Right.
if something does get posted in error and we're sending those investigations, that company will not be able to send back that correct information. And that's where we're able to remove those errors, if that makes sense.
Wow. So, as a homeowner looking to buy a home, get a team put together. Your team needs to consist of a great real estate agent, a great mortgage lender, and if we've got to do some credit repair, a great team like Mortgage Ready LLC to be on your side and your advocates and getting your credit scores up. I love it. What is, let's see, how can a realtor and a lender best support you and that person looking to buy a home? How can that relationship gel?
Yeah. Well, we have a team of credit analysts over here. Each one of the mortgage professionals that we work with is paired directly with one of those credit analysts as your go-to for all things credit related. Okay. So, for instance, I think you're working with Jenna right now. So
Hmm.
basically, if a lender or a realtor says, "Hey, listen, I have clients that want to buy homes, they can't because of their credit." Uh, Basically, I'm one of the directors of operations over here, so I would connect them with one of our credit analysts. That would then be their person going forward. We have what we call a referral source portal. That's just an extension to make things even easier. But
Yeah.
they can submit those clients' information over that same day their credit analyst reaches out to have a free consultation with that client, letting them know, how it works, answering questions, talking about their specific situation to make sure that it does fit, and then getting them going if they so choose to. So it's really just about that initial contact. Honestly, I mean, basically, if there's a realtor or a lender listening to this, I'd say give us a call and we'll connect you with somebody to be your go-to to help you close more loans.
There you go. Look, if you're looking to buy a home and that credit report comes back and there's some work to be done, reach out to me. I'll introduce you to my team over at Mortgage Ready, introduce you to Jenna and Chelsea, and we'll get you mortgage ready. How long are you seeing? Is there a timeline that you're usually seeing for somebody that doesn't qualify to purchase a home? And if they follow what we say to do, and we get on a timeline, or what are you seeing their when they hey, congratulations, you're qualified. We got your scores up to where we need maybe the minimum, but
Yeah.
to qualify to purchase a home.
Yeah. Well, I would say, again, there's no locked in time frames, but
Right.
for the most part, we're getting folks back to lenders from 3 months to 6 months for the
Yeah.
most part.
That's
Depends.
fantastic.
Yeah, it depends on where they're at, but you kind of put it perfectly with, if they do everything that you say. I would say when folks take the advice that we give them, follow the plans that we create for them, because we do
Yeah.
that too. We don't just say sit back and hope for the best. We curate a plan tailored to their credit that lets them know what their blueprint is to get there as soon as possible. And when they follow that to the best of their ability while we're doing the work on our end, we have them where they need to be by the date we predict, if not sooner,
Yeah.
95% of the time.
Wow.
So,
Folks, home ownership is within your grasp. Chelsea, what is the best way for someone to reach you or
yeah.
Jenna and to get on get on the books with you, so to speak?
Yeah. Well, I would say if any clients or any individuals thinking about trying to move forward with a home loan, knowing that there's issues with your credit, honestly, I'd say to reach out to you first, Nate, so that you can then connect them to us, right? Because
Okay.
here's the deal too. Most of these folks are coming to us from mortgage professionals. The reason why we like to work that way is because we can then return them when they're ready,
Yeah.
strapped so y'all can move forward with ease. If
Okay.
somebody just wants some extra information, our number is 970-692-4216. We are in Colorado, so there's a time difference there. I think we're about maybe 2 hours behind y'all. Where are you at again? Are you Eastern Standard?
Yeah. Eastern.
Yeah, so
No,
we're
no,
yeah.
I'm Central. Sorry.
Oh, okay. There we go. We're
That
one
means
hour
all over the
behind.
place. Yeah.
So we're
Central.
here from 8 a.m. to 4 p.m. Mountain Standard Time. Feel free to give us a call. You can email. My email is Chelsea, CHELSEA at
Yeah.
mortgagereadyllc.com. Jenna is also a great person to reach out to. Same ending, it's just Jenna, JENNA at mortgagereadyllc.com.
Okay, and I'll put links down below. Great ratings of your company on
Yeah,
Google. Got fantastic ratings.
for
People
referral based
check that
only
out.
too.
Yeah, for a referral. Yeah, I mean that's fantastic. Okay, last question. We are almost out of time. For people that are watching, there is some unique, beautiful artwork behind you. Tell me a little bit where that is, or how did you come about those?
Oh, thanks. Those are mine actually. I do a little bit of art on the side. I'm a creative person. So
Nice. Well, I noticed and I was like, oh, those are cool, cool.
thank you.
So that's the extent of my art critique.
Oh, well, I appreciate it.
I like them. So, all right. Well, fantastic call, Jenna, or Jenna, and sorry,
You're
Chelsea,
fine.
and I got Jenna on my brain because I
I know,
sent
well,
her
I've
over
said
some
her name so
clients.
many times. I know. I'm
Right.
really reminding you. No, our team of credit analysts is amazing over here. Every
Yeah.
single one of them, and they truly care about helping people. So you want it fail no matter who you're working with.
Yeah. And I've sent her a number of people already that we're working to get them ready. And it's an exciting journey. And those people I stay in contact with monthly just to cheer them on and
Yeah.
keep them focused on the end goal. And however long the journey is to your goal of owning a house, it's your journey. It's not to be compared to anybody else's journey. And
100%.
I'm happy, happy, happy to help people get there. It's my purpose. What I'm here to do.
Yeah.
So thank you, Chelsea. Fantastic talking to you.
Yeah, you as well. Thank you.